So, can AI actually predict which companies are about to go bust? You hear all this talk, right? The promise is absolutely huge. But the reality? Well, it's way more complex and, honestly, a lot more interesting than you might think. Today, we're going to peel back the layers on the hype and the surprising truths behind AI's role in the super high-stakes world of corporate bankruptcy.
All right, here's the game plan. We'll start with the exciting promises of AI in finance. Then, we're going to hit a pretty surprising reality check from some very recent research. After that, we'll take a quick trip back in time to see the history of all this. Then we'll peek inside the mysterious black box of AI and see how this tech is shaking things up in the legal world. And finally, we'll look ahead to what the future of financial AI really holds.
Okay, first up, AI, the new financial frontier. This is where all the buzz is, you know? We're constantly told that AI is on the verge of completely revolutionizing how we handle financial risk.
So, the big idea here is actually pretty simple, but it's also revolutionary. What if we could make financial analysis not just faster, but incredibly precise, and get it into the hands of more people? It's all about trading and guesswork for data-driven certainty, especially when the stakes are this high. And listen, this isn't some pie-in-the-sky, futuristic idea. It's happening right now. There's a whole industry of AI-powered platforms out there, designed to do everything from managing credit risk to spotting fraud in real time.
And just take a look at this. It's a little snapshot of a really thriving market. You've got tools like Finbox for super deep data analysis, Sift for fraud detection, HighRadius for credit management. The point is, this isn't just theory anymore. It's a massive multi-billion-dollar industry in full swing.
So, the hype is real, the market's booming, everything seems great. But what if I told you that for one of the most critical predictions of all, corporate bankruptcy, the newest, shiniest AI might actually not be the best tool for the job? Yeah, some brand new research just threw a major curveball that challenges, well, pretty much everything we thought we knew.
I mean, with all this incredible new power, you'd think the latest and greatest AI models would be a slam dunk for predicting when a company's about to fail, wouldn't you? But is newer really always better?
And boom, here it is, the bombshell. A 2025 paper from Archive found that for this very specific, incredibly high-stakes task, older, more specialized machine learning models like XGBoost are actually more accurate and reliable than the massive foundation models that power tools like ChatGPT. I mean, that is a genuinely shocking discovery. So what is going on here? Why would that be? Well, to really get it, we need a little context. Predicting business failure isn't some new puzzle that AI just stumbled upon. People have been chipping away at this problem for almost 100 years.
This just shows you the long journey we've been on. I mean, it started way back in 1932 with just comparing companies. Then in '68, you get Altman's Z-score, which became a total staple in finance. By 1980, we had even better stats. The whole point is, this is a field with really deep roots and methods that have been tested in the real world for decades.
Okay, so this brings us to a really fascinating paradox. If these huge new AI models are so powerful, why are they getting beat on this one specific task? The answer, it turns out, is something called the black box problem, and it's right at the center of the whole AI ethics debate.
Okay, imagine an AI tells you a major company's about to go under. You ask why, and the AI basically just shrugs its digital shoulders. That's the black box problem. And for regulators, investors, anyone who has to justify their decisions, an answer without an explanation is pretty much useless.
And this is exactly where explainable AI, or XAI, comes in. Think of it this way. A black box AI just spits out an answer, but an XAI model gives you the answer and shows its work. It gives you the reasoning. In the world of high-stakes finance, that kind of transparency isn't just a nice-to-have, it's a must-have.
So the really crucial takeaway here is this. It's not just about getting the right answer. It's about being able to stand up in front of a board or a judge or a regulator and prove exactly how you got that answer. That's where real trust is built.
And you know, this need for transparency isn't just some abstract tech issue. It has serious legal implications. When an AI's prediction can literally decide the fate of a company, you better believe the courtroom becomes the ultimate test of its reliability. I mean, just look at the potential landmines here for lawyers. Generative AI can literally make stuff up. We call them hallucinations. Attorneys who misuse it can get sanctioned by a judge. The AI can carry hidden biases from its training data, and now courts are starting to require lawyers to admit when they've used AI. So what this means is that the old rules of professional responsibility still apply, just with a modern twist. You have to know the tech you're using, you have to protect your client's data, and you have to supervise the AI's work just like you would a junior associate. You can't just throw up your hands and blame the algorithm.
So where does all this leave us? It seems pretty clear that the future of AI in finance isn't just about building bigger and bigger black boxes. It's about developing a new generation of AI that's smarter, more transparent, and built for the job.
The big lesson here really isn't that new AI is bad or useless. Not at all. It's that progress isn't just a straight line where bigger always means better. The real future is probably in these more specialized, transparent, and purpose-built AI systems.
And this is where things get really cool. You have technologies like graph neural networks taking a totally different approach. Instead of just looking at one company by itself, they map out the entire financial ecosystem, this incredibly complex web of loans, investments, supply chains, to see how risks can spread from one place to another. It's kind of like having a financial weather map that can actually predict the storms before they hit.
And so, at the end of the day, we're left with this really fundamental question. When it comes to our most critical decisions, what do we actually value more? The raw, untamed power of the absolute cutting edge? Or the proven, transparent reliability of something we can actually understand and trust? The answer to that question is going to define the future of finance and our relationship with AI itself.